to round 2 of my epic conversation with Kirian Van Hest, also known as Deso Games. We got some cyberpunk music going on here in honor of our very smart guest who is about to uncover the dirty little secrets of the crypto world and really shine a light into some areas that a lot of people do not want to know exist. Our goal is to find the next Apple, Netflix, Google, Microsoft. We want to get in early, get in small, and grow it huge. So, a lot of people do think Bitcoin has that opportunity, but Deso doesn't think so. He's very convincing. He presents some pretty solid arguments against Bitcoin, but we're trying to uncover the truth, and if anyone out there wants to debate or refute or provide counter evidence, please do in the comments so that we can really get to the bottom of who's right, who's wrong, what should we do with our money. But once again, this isn't investing advice, it's more just to get the information that will help you make decisions with a professional. Well, this was recorded on October 17th, and some of the data may have changed since then. The concepts are still very much in place and even more relevant today. So here it is. Enjoy round 2 of our conversation with Kirian Van Hest. So what a lot of people are going to say is, okay, we hear your arguments on inflation and we agree with you, but what you're missing is digital gold / Bitcoin, right? That's a lot of people are going to say. So what are your thoughts on why Bitcoin may or may not be a similar hedge on inflation as silver and gold?
Yeah, so I have got an article up on desgames.com called Why I Hate Bitcoin and Why Tether Will Kill It. So I dislike Bitcoin for multiple reasons. First of all, it is not backed by the energy that has been used to create it. That is an absolute asinine statement. I cannot believe people believe that. Are you all insane? Because if you want to argue with me, first go read the article, because there's many arguments in there and I can't list them all right now. But I think the most effective argument to show it in a very short time is what happens if you turn off the machines. So, people claim that Bitcoin is backed by the energy used to mine it, but I dispute that. Simply because if you turn off 99% of all Bitcoin mining machines right now, what happens? Well, the artificial difficulty of Bitcoin will adjust for the reduction in hash rate, and the production of new Bitcoin as well as transaction rate will stay stable. Currently at, I thought, about 6.25 Bitcoin per 10 minutes for transaction block or something like that since the halving of this year. Well, if you measure the difficulty of getting gold out of the ground in barrels of oil, then it never changes. Now, the price of oil and the price of gold, the price of labor may change and everything, but we're not talking about price here. We're talking about energy. How much energy does it cost to get an amount of gold out of the ground? Well, if you assume the same mining grades, so we're talking about the same rocks with the same content of gold in them. And if you assume the same mining equipment, which can be equated to technological advances in Bitcoin miners, if you give a miner a better drill, he's just going to drill more. That's a fact. But taking that into account, it will always cost the same amount of oil to get the same amount of gold out of those rocks. Why? Physics. Physics basically says you have to expend work to get a result. Action, reaction. You can't violate that law of thermodynamics. It's just not possible. You can't turn off 99% of all the mines in the world and then extract 99 times more gold out of the remaining mine with the same barrel of oil. That just doesn't happen. But if you turn off all 99% of all Bitcoin machines, the artificial difficulty adjusts and you will mine more Bitcoin. But the new Bitcoin mined will be just as good as the old Bitcoin mined, even though it's at 1% of the energy of the old Bitcoin. You cannot distinguish the old Bitcoin from the new Bitcoin. They're all Bitcoin. So naturally, the old Bitcoin is as good as the new Bitcoin. So the amount of energy spent on the new Bitcoin is as good as on the old Bitcoin, which is not the case because a lot more energy was used. Ergo, energy is not backing the Bitcoin. It can't.
So then why Tether, if you could go into that?
Because Tether is effectively acting as a central bank for cryptocurrencies. So what Tether is a stable coin. For those who aren't initiated in the crypto world, stable coins are basically coins that are pegged to another asset, another currency, usually in Tether's case, the United States dollar. So one Tether is pegged at $1, meaning in any and every situation, one Tether is worth $1 and $1 is worth one Tether. Very important to remember. This also basically means that the market cap of Tether is also their circulating supply. So if they have a 1 million market cap, they have 1 million coins out there, and it does fluctuate a little bit, but that is money going into Tether and out of Tether. So you will see the price go from $1 exactly to 1.00008, something like that. So effectively, you can say the market cap is circulating supply. Well, first off, Tether is an incredibly sketchy company who never did an audit of the books except once in 2018. And in that audit that was done by a law firm, not even an actual auditing agency, and they just set that straight up in the proof of funds. You can find it on the website tether.to. There's a big button there called proof of funds. And, well, basically, it's the only audit they've ever done. So what was at the bottom of this audit? Right here, it says, FSS is not an accounting firm and did not perform the above review and confirmations using generally accepted accounting principles. So the audit is non-GAAP. The above confirmation of bank and Tether balances should not be construed as results of an audit and were not conducted in accordance with GAAP principles. So it's not an audit either. FSS make no representation regarding sufficiency of the information provided to FSS, and all inquiries made by FSS have been directed to the client and or third-party personnel responsible for maintaining such information. Basically, they took them at their word. Procedures performed are not for the purpose of providing assurance and are limited to findings listed above as June 1st, 2018, close of business. Basically, the audit is not for making sure that the stuff is there. It's only to affirm that on that date, they showed us 2 accounts which had this much money. That's it. Number 5, FSS did not, as part of the engagement, arrive at any conclusions as to Tether's compliance with applicable laws and regulations in any jurisdiction. Great. Number 6, FSS has assumed, without further inquiry, that the bank personnel providing confirmations were duly authorized to provide such confirmations and that the confirmations were correct. Again, we took them at their face word. After that audit, somewhere in 2019, Tether changed the language on their website from every Tether is always 100% backed one-to-one by dollars to which is still right now currently the situation. You can check this right now. Every Tether is always 100% backed by our reserves, which include traditional currency, which is the dollar, and cash equivalents. Those are important. I will come to that in a moment. And from time to time, may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities, collectively, quote unquote, reserves. So basically, loans they made to somebody else also count. Well, on the Wikipedia, by the way, you can just find this on Wikipedia. It says, on April 30th, 2019, Tether Limited lawyer claimed that each Tether was backed by only 0.74, so $0.75 in cash and cash equivalents. So in 2019, a quarter of the money was already not backed by cash or cash equivalents. It was loaned out. Now, their market cap was about $2.8 billion at the time. So roughly 800 million would have been loaned out, which is also an important amount because in July of this year, a fraud investigation into Bitfinex, the company which also started Tether and which Tether loaned 900 million to, continued in the fraud investigation by the state of New York, I think. In any case, Bitfinex is already under investigation for fraud. That investigation was allowed to continue. And as a result, a 900 million loan from Tether to Bitfinex has been frozen. 6 days later, Tether prints 900 million tethers, which equates to $900 million. Fancy that. Quite a coincidence. Now, all of that basically goes to credibility of Tether. Basically not. They're sketchy as fuck. But the real matter here is, and why I think Tether's going to kill Bitcoin, is because, well, Tether's going to collapse. If you go look at the market cap of Tether right now, and since the last time I checked, it has gone up by another 75 million. So, no, 65 million, actually, circulating supply. It used to be 15 billion, 750 million, but it's now 816 million. So, it's gone up again. I am willing, not able, but I'm willing to give Tether the benefit of the doubt on anything before January 1st, 2020. Basically, on January 1st, 2020, their market cap was 4.1 billion. And even though they already stated that 2.8 billion was only 3/4 backed, I'm going to assume, for the sake of argument, that 4.1 billion was 100% backed. On the 6th of January, market goes up, no, the 7th of January, it goes up to 4.6 billion. So that's 500 million out of nowhere. Well, fine. The pandemic wasn't happening yet. Maybe some rich people out of China wanted to escape Wuhan with their money. Who knows? Fine, I'll give him January too. What I won't give him is that after the whole March collapse, which you can see on the charts, had a very profound impact on the value of Tether because it spiked all the way to 1.05 and went all the way down to 1.95, which is quite a trading range for the stablecoin. That changed something. Because on March 31st actually, the market cap jumps from 4.6 billion to 6.1 billion. Now, are you telling me that they found 1.5 billion to invest in Tether in March 30th at the bottom of the market with the fucking pandemic going on and that panic? No, I refuse to believe that. But if it was just that, you know what? I'll give him that too. Because my arguments don't rely on one thing. I'll give him March. What I won't give him is that on May 11th, their market cap was 6.3 billion. And on May 17th, their market cap was 8.7 billion. So they printed 2.4 billion. You can just plainly see this jump. So are you telling me, even though that 4.1 billion at the beginning of the year already wasn't backed by the full amount, but that doesn't matter. Are you telling me that they doubled that by May in legitimate money? Fuck no. Now it gets worse. It gets worse. Because as I said, in June 2nd around that time, it goes up from 8.8 billion to 9.2 billion. That's not a 400 million printed. Then on 17th of July, they lose the $900 million loan from Tether to Bitfinex. And on July 23rd, it jumps up to 10 billion market cap. And then it goes on. And then something else must have happened internally in September, because at the beginning of September, on August 31st, market cap goes up from 10 billion to 13.3. So now they printed 3.3 billion? They found 3.3 billion in a day? No. I've already passed fuck no. So I don't know what else to say. Now, if it was that much, maybe it'd be legit. Maybe, but it still goes on, because September 2nd, it was 13.4 billion. And if it's what it's now, it's 15.8 billion. So in about a month and a half, they have found yet another 2.4 billion. I have no words for this. But the reason why I say it's going to kill Bitcoin is because many people within the industry know that Tether is a scam, and they don't care. Because I already had somebody on Twitter come to me and say, I'm going to disprove your arguments. And I said, good luck with that. I hope you do. Because if this blows up, a lot of people get hurt. And I just don't want anybody to get hurt. I want people to get out as much as possible, as soon as possible. Because people are going to get hurt. And I just abhor suffering. But he actually contacted some people. And he came back to me a few days later. And he said, well, I actually contacted some people. And none of them either cared or they all knew. So I told him, all right, so let me get this straight. you tried to disprove my theory and you could find nothing? And he said, yes. So, but Tether right now is almost 16 billion. The total supply is 16.17. So they have a little bit of buffering there. But the total Bitcoin market cap is 211 billion. It's substantially larger. So why is Tether going to kill Bitcoin? Well, that is because of the way Tether has been running its scam. Now, I should stress, I have no evidence for this. Again, nobody's looked at the books in a very long time, and the whole point I'm making is somebody should look at the books, and meanwhile, everybody else should get the fuck out. But so the way I think they've been running this is because, again, one tether is $1. $1 is one tether. They can print as many tethers as they want, whenever they want. Very important to remember. So what they do is they print 10,000 tethers when Bitcoin is $10,000. Or no, I should say it differently. If Bitcoin is $10,000, they print 20,000 tethers. They use 20,000 tethers to buy 2 Bitcoin. They move 1 Bitcoin to the balance sheet, taking it out of rotation so that the price continually goes up through supply constraints. They sell the second Bitcoin they bought for 10,000 tethers for $10,000 and move the dollars onto the balance sheet. Now, 20,000 tethers are backed by $10,000 and 1 Bitcoin worth $10,000. If the price, well, why would they do something like this? It's because, well, they have creditors as well. They also have debt, and that debt is in dollars. So if that debt has to be settled, then they need to pay it in dollars. They cannot pay tethers for debt in dollars, because while Tether may be seen by the market as good as dollars, if you make a contract for $1 loan, you have to give dollars back. It's that simple. So what they then do, so they buy 2 Bitcoin for 20,000 Tether, move 1 of them on the balance sheet, sell 1 for $10,000, move $10,000 on the balance sheet, and then they have to pay the creditors $10,000. Now they only have 1 Bitcoin worth 10,000 backing 20,000 tethers. So they need to achieve parity with that again. Very easy solution. They print 40,000 more tethers. That buys 4 Bitcoin at 10,000. So they basically move 3 of them on their balance sheet and sell another 1 into the market for $10,000. Now they have 60,000 tethers out there with 5 Bitcoin and $10,000 on the balance sheet backing it. So if anybody wants to redeem their tethers for dollars, well, they just draw it from the $10,000 pile, and there's no big problem going on. If anybody else wants more dollars, they can just sell the Bitcoin on the balance sheet for dollars and, give them the dollars. That scheme works until the Bitcoin drops. Now, naturally, because they keep moving Bitcoin on the balance sheet, it's not liable to drop quick, but it did in March because there was a massive market panic. And market panics always have a tendency to shake the tree and scams fall out. Bernie Madoff also got killed because, not killed, but his scam got killed because the market crashed in 2008. And everybody thought he was in the market, even though he never made a trade in his life because that was his scam. So everybody started redeeming the money they had from his funds. Ironically, had they let it in the market, they would have actually earned money because it was pure cash. But because everybody redeemed it out of panic, he ran out of the dollars. So that's basically what has happened this year to Tether. The price of Bitcoin collapsed because in a panic, everybody just wants $1. They don't want Bitcoin. They don't want a Tether. They don't want Ethereum. They don't even want gold because gold also dipped 20%. So cash is the preferable method in an immediately liquidity panic as we had in March. So that's what happened to the price of Bitcoin. It crashed in March. And as a result, Tether's scam began to unravel. Because if they now had to sell Bitcoin into the market, they would get a lot less dollars than there were tethers out there. So the parity would become skewed again. Now, I wouldn't even be surprised to learn in the future that the March crash in crypto, where it crashed 66% in a day on Bitcoin and 85% on Ethereum, I wouldn't be surprised to learn that it was Tether forced selling. because Tether ran out of dollars, so they had no choice but to sell their crypto on the balance sheet into the market. But the market was already crashing, so they exacerbated that and crashed the price further because, well, they had no choice. People wanted dollars and they had to find them somehow, which in the case of crypto means selling it into the open market. That's important because this scam, like every other scam, is going to run into a brick wall at some point. As I showed earlier with the example, at some point you have 5 Bitcoin for $10,000. But at some point you're going to have 2 million Bitcoin for $10,000. And somebody's going to redeem more than $10,000. You can't sell 10 million Bitcoin. You're going to crash. The scam's going to end. Tether's offices will be raided. And they will file for Chapter 7, liquidation. But that's the problem. How are they going to liquidate those assets? In the case of crypto, there's only one way to liquidate those assets. They're going to sell them into the market. So if Tether caused the market crypto crash, then when Tether ends, it's going to again cause a March crypto crash, only this time it's going to be much worse because the liquidators, they don't care. That's their job. It's not their job to care. It is their job to get as much dollars back for the dollar-denominated loans that Tether made that they now cannot pay back. That is liquidation. So at that point, what's going to happen is the cost of Bitcoin is going to drop vastly below production because this year the halvening happened. And what the halvening is that the block reward per Bitcoin block mined, which used to be 11.5, I think, or 12.5, I think it was 12.5, and it went down to 6.25. So it halved. That's why it's called halvening. But before the halvening, production costs were about 3,000 to 4,000 per Bitcoin for the most advanced miners. So that also doubles because electricity is still going to cost as much. So now the production cost of Bitcoin is between $6,000 and $8,000, which is fine when Bitcoin costs 10,000. But when all of the cryptocurrency assets on Tether's balance sheet are sold, it's going to drop below 6,000 for sure. Because it already, to drop below 6,000 from this point, is a less than 50% drop, and we already dropped 66% on Bitcoin. So it's not unprecedented. Once that happens, Bitcoin will, for the first time in its life, be produced at a loss because the costs have dropped below production costs, so they either shut off the machines or they produce at a loss. Well, those machines are housed in buildings. Those buildings have rents, they have leases and all of that, so you can't just shut them off. Well, as Rick Rule says, for uranium miners, which have produced uranium below cost for many years now, the cure for low prices is low prices. If Bitcoin drops below production cost, the ones who are going to survive the longest are the ones with the deepest pockets and the most advanced material already installed. While the independent miner is going to drop out first because he doesn't have any capital to produce at a loss, so he's going to drop out. And those are the ways in which the network hashing rates are going to come down. Now, all of this is natural, all right? All of this is complete natural market behavior, and it shouldn't even be any other way. And it's not going to be any other way. And everybody who knows this about Bitcoin should agree with me that this isn't per se a bad thing. It's just normal capitalism, weeding out the weak and surviving the strong. But Bitcoin has one design issue, which is its decentralized trust. You're still going to have to trust the system. How do you trust the system? Well, if any one person doesn't have 50% of more on the network, before somebody finishes a second transaction, you can check the transaction, you can verify it. Because the way Bitcoin works is it costs a lot of energy to make a very complicated calculation, but once the calculation is made, you can very easily check it both ways. So the verification is very fast, but the calculation is very slow. Not to get into more technical details, and to be honest, I don't know everything about Bitcoin because I haven't traded it, I wouldn't touch it. But what's simply going to happen is more and more network hashing rate is going to be concentrated in less and less hands, just as any physical miner or miners in the same situation are going to consolidate. The small miners are going to drop out, the small companies go bankrupt, the big miners survive, and then the recovery happens. Well, if anyone manages to gain 50% of the network because Bitcoin has dropped so much that the cost of production is so high compared to the price of selling, that so many people drop out that only the most well-capitalized survive, you could either get a cartel or a straight up 50% attack. And once that happens, all faith in the crypto is lost. Because as I said earlier, Bitcoin is not backed by the energy that's spent on it. So it's fiat. Now, I don't want to get into too much very complicated economic theory, but in principle, I don't have any problems with fiat either. It's just a problem that they can't stop printing it. But Bitcoin doesn't have that problem, so I'm not going to mention it. But still, fiat runs on faith. So Bitcoin also runs on faith. When people no longer believe that it's worth anything, well, it's not going to be worth anything. So the moment a 50% attack happens, which means that the person who becomes the authority on the network basically gets control over every transaction, they can block every transaction and reroute it to their own wallet, well, faith is going to disappear. And there's precedent for this, because cryptocurrency can also be forked, which basically means they copy the entire chain and they continue onward with different transaction blocks than the first one. So it's basically a split, except then it's a copy and then it splits off. Well, Bitcoin has had 3 splits: Bitcoin Cash, Bitcoin Gold, and Bitcoin SV, which is a split off from Bitcoin Cash. Well, Bitcoin Cash has about 4.1 billion in market share still, which is another proof that the energy does not back Bitcoin, because they copied the entire Bitcoin chain into Bitcoin Cash, which means the amount of blocks representing that value doubled, but the price didn't halve. Bitcoin just went up anyway, and the price for Bitcoin Cash introduced at half the price of Bitcoin, and it just went down. Like I said, Bitcoin Cash now has a market cap of 4.3 billion, while Bitcoin has 211 billion. Both have about 8.5 million coins in circulation. So again, if you can just fork the whole chain and copy the whole chain, it's not the energy backing it. But anyway, to get back to my point, Bitcoin Cash has a market cap of 4.1, while Bitcoin Gold, which has suffered 50% attacks because it's just a lot smaller, has a market cap of 141 million, which again, it's almost 40 times less, something like that, 35, 40 times less, because Bitcoin Gold suffered 50% attacks and the confidence in Bitcoin Gold has been given up. I don't even know why it's still worth 151 million, to be frank, because it had another 51% attack in July, somewhere like that. So
that's a great bear case for Bitcoin. My question is, why would the government allow Bitcoin to exist if it's going to compete with the digital dollar?
Because it's not a threat. It's not a threat. Have you ever heard of deep packet inspection? Well, that's well known. I did a system administrator's education, IIT, in 2003 to 2007. So I did it not because the education was good, the education was shit, but because I already knew a lot about computers and I needed something to just drift through with my eyes closed because I didn't have a diploma and I dropped out of high school. So I know plenty of tech, but it's not because of the education. Regardless, I was well aware of tech before even Bitcoin arrived, and I already dove into economics before Bitcoin arrived, so I hated it from the very start. And the reason why it's not a threat is because the government can just shut off the network whenever they want. I'll give you a very simple example. Anybody who has ever played a peer-to-peer networked game on a Comcast connection will know how shit it is, because Comcast has been throttling peer-to-peer connections for decades. Now, if they can throttle peer-to-peer connections, they can also throttle crypto connections, because the deep packet inspection doesn't need encryption. It doesn't need to know what is in the packet. It just needs to know what kind of packet it is and where is it sent. So just because it can't read the Bitcoin data doesn't mean it doesn't know that it's Bitcoin traffic. So if you have internet, you have an ISP. And if you have an ISP in America, your communications are already listened to by NSA and CIA and whatever black boxes are hooked into the ISP's server room. So yeah, whenever they want, they can just shut off the whole network, because they'll just tell the deep packet inspectors to block crypto traffic. They can shut it off now, not tomorrow, not yes, now, and now, and now, and there's no end to this. They can literally shut it off whenever they want. Now it's going to cost some technical effort, sure, but they're still going to just shut it off in a very short time, and that basically means it goes to zero. Because unlike gold, you cannot trade Bitcoin offline. Oh, sure, you can give each other wallets, but you cannot send one Bitcoin to another wallet without going through the system. And the system uses internet. So good luck with that.
Yeah, why buy something that the government would just shut off if they want to, which they probably might want to if people do try to use it, correct?
I don't have any Bitcoin. I never touched any crypto. And I just wrote a 15,000 word article saying why I hate Bitcoin. Yeah. So I don't know why anybody would buy it. Well, no, that's not true. I know exactly why people would buy it, because it's human nature why they would buy it. If it's too good to be true, it usually is. And people are just being enticed with a free lunch. There's this Rule Powell guy going on who's a former Goldman Sachs hedge fund manager, because those people are trustworthy, who just put like a 50% of his net worth bet on Bitcoin. Note that the 50% he didn't put in there, that's basically on the other side of that trade. And even if that 50% goes to zero, the other 50% is still going to make him a very wealthy man. So the rules are different for the rich than for the rest of us. Anyway, because he's saying that he expects Bitcoin to go to 1 million, people are going like, wow, 1 million, I can buy one now and I'll be a millionaire. Yeah. That's exactly what's happening. If you really want to get rich, all right, because that's what we're talking about here. People just want to get rich.
Yep.
You can't do that on a single bet, all right? There are people who have done it, but it is always luck. If you want any example, look at Masayoshi Son, who is the richest man in Japan, CEO of SoftBank, who got rich off a single bet, his Alibaba stock, who put 20 million in, and it went to billions. And it basically cemented his reputation as this guru investor who knows everything about stocks. And he's taken many different risky bets in many different companies because of that reputation and because he thought he was skilled. Well, he put a bet in on WeWork, valuing at $47 billion, and that collapsed pre-IPO to a valuation of $8 billion, and only because SoftBank bailed them out with billions. So they already put like 7 or 9 billion in. They put in more, it's like 3 billion more for an 8 billion valued company before the pandemic. All right, WeWork is a office sharing company. So SoftBank's fucked. It's gonna be bailed out at some point by the Bank of Japan, if not just straight up collapse the Japanese economy. Their vision fund is worth 100 billion. Like there's 100 billion in cash that was put in there, that was put into these companies, which he just burned. There's so much wrong with that company. I haven't made an article on it, and others have, and I would highly recommend just searching on the internet into the dealings of SoftBank and the shit they've pulled this year and the year before, and the crazy stuff like that. My point is that Masayoshi Son had it all twice, because he was also very rich before the dot-com bubble. He lost it all in the dot-com bubble. He bet on Alibaba. He gained it all again, and he's going to lose it all again now in the next bubble, because he's not a guru investor. He's just lucky. He's not an investment guru. He's not good at investing. So he just keeps burning money. But you have to understand, again, the rules for the rich are different than for the poor. If he has the reputation of being a guru investor, people are just going to throw money at his face. Like you said, you think I'm the best one to bring this Bitcoin message out there. I am still very much an unknown. Like nobody knows me. Eventually they'll know me, but nobody knows me right now. Why would they trust me? Why would they believe me? People will go to believe me in the future, but that's only because Bitcoin collapsed. I was right. That's the only thing that's going to happen. Now,
well, you've been right about a lot of other things too. So, and you're proving it. It's not like you're just saying things. You're proving it. You have data.
Well, still. Reputation matters more than anything else. And, well, if you really want to get rich, you need to get a reputation. But basically, to get back to my point, if you want to be rich, you need to know how to stay rich. And that goes back to my point, what I said earlier about rotating silver into oil or rotating into assets that generate income when there's deflation. All of that serves to increase my wealth further after the first bet. Now, I know you guys want 500 times your money, but know that if you make 500 times your money, you were lucky. I am fine with making 100 times my money 5 times, because compounding interest will make it so much more.
Right. No, we are too. And, obviously anyone should be. Making 10x is great, right? But we're just trying to find the next great opportunity.
Peter Lynch put it right. There's a 1994 lecture of Peter Lynch that's on YouTube, which I highly recommend anybody watching, because he also explains things without math in a very down-to-earth manner. And he also says people are terribly hasty when they want to get into stocks. They call up out of breath to get into these stocks, and there's no need for that. If you invested in Walmart at the IPO, you would have gotten 500 times your money. But if you invested into Walmart something like 20 or 30 years later, you still would have gotten 35 times your money. So most people will never get rich, because even if they get lucky, they have no idea how to hold on to that money, because they're not good with money, and that's why they were not rich in the first place. So if you want to stay rich, you need to know how to hold on to that money, and most importantly, how to repeat the trick you just did. So if silver is going to go up and you become rich on silver, that's great. I'm happy for you. But if you then hold on to that silver and ride it all the way down again, well, you're poor again.
Absolutely.
So that's the real key to being rich. It's not getting the 500 times bet. It is getting the 100 times bet 5 times right in a row.
Yeah.
That's just grab a calculator here. Let's do 100 times 500. 100 times 500, you can turn $100 into 50,000. I'll do 100 times 100. 10,000, million, 100 million, 10 billion, trillion. That's compounding. That's why you want 5 times 100 instead of 1 times 500.
So thank you. You clearly know your shit, and I think people have realized that if they've listened this far, which I'm sure they have.
If they have, thank you very much.
Yeah, no. I mean, guys, just do yourself a favor. Follow him. Follow Deso at Deso Games on Twitter. Read his articles. Your future self will thank you.
We're gonna do promotion.
That's what I just did. So.
No. I'll tell everybody where to find me. The Twitter is one place. I'm most active on Twitter, and you can send me messages on Twitter if you have questions about stuff or my articles. You can find my articles, the long form content on my website, desogames.com. You can also find me on Twitch, where I will be doing live recordings in the future. I'm going to start a podcast in the future myself. And if you want to hear it first before anybody else, I'll record it on Twitch. There's not going to be any chat interaction or anything, but you just then you hear it first. Then I'll upload it everywhere, so you can still find it on your favorite websites. But I'll also use Twitch for additional live streams, bonus streams through the week, because I'm a heavy gamer. So there's going to be times where I just want to play a game. I'm like, oh, why not stream it? And when I'm around on Twitch, you can just ask me anything. Basically, whenever you see me online in any streaming situation and it's not an interview or a podcast and the chat is active and everything, you just ask me questions. Happy to oblige. And that's basically it.